Hello and welcome to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka. Well, at the start of the day, we had snapped out of a two-day loss, but towards the end of the session, we saw the Nifty slipping below that 18,200 mark and clocking in a third straight day of losses. Even the Sensex ended lower by about 300 points or thereabouts. Well, talking about the top losers in today's session, it was clearly the Nifty PSU banking index that was in the red. Then there was FMCG, Realty. These were the top losers. However, private banks managed to hold out in today's session. Among the top Nifty losers, you had the likes of Divi's Labs, Adani Ports, SBI after a good set of numbers, ITC after a mixed set of numbers. These were some of the top losers. When you look at the gainers, on the other hand, you had Bajaj Finance, Bharti Airtel extending gains, Kotak Bank, ICICI Bank and HCL Tech. Those are the top 5 gainers on the Nifty. Among the mid-cap gainers, you had the likes of restaurants brand Asia. Remember, there is news flow regarding this stock. Everstone, the PE giant, has put its entire stake in the company on the block. Remember, restaurants brand Asia is the operator of the food chain Burger King. And this company was not delivering according to Everstone, which is why it is looking at exiting its stake in the company. In the fray are Jubilant Food and a PE consortium backed by Advent and General Atlantic. Well, this deal could happen as early as next month and could trigger an open offer. So this is something that led to strong gains of 10% or thereabouts on this stock. Aside of that, Honeywell Automation on the back of strong earnings, Jindal Stainless once again on the back of robust fourth quarter performance was among the top Nifty 500 gainers. Among the mid-cap losers, you had the likes of GNFC, Thermax, Godrej Properties and MTAR Tech on the back of a very disappointing set of earnings, was down somewhere around 5% or thereabouts. Let's now talk about all the stocks that are on the radar this afternoon. Of course, starting with SBI, the numbers were pretty good, nothing to complain about. 83% uptick in the fourth quarter profit at 16,694 crores versus 9,113 crores on a YY basis. It was a beat on expectations because the expectations were that profits will go up by somewhere around 65% or thereabouts, but it has clearly outperformed and topped that estimate. When it comes to NII growth, it's up 29.5% at 40,392 crore rupees versus expectations, or in fact versus 31,197 crore rupees last year. So 29.5% vis-a-vis expectations of 26.5 or thereabouts. Again, a beat. The positive surprise was on the loan growth front. That saw an uptick of 17% on a YOY basis, and expectations were that loan growth will go up by somewhere around 15.5% or thereabouts. So this was a very good positive surprise coming in where loan growth is concerned. In fact, even on the provisions end, it had literally halved compared to last year, and credit costs have also gone down. When you look at the asset quality, that has improved on a QOQ basis, better than anticipated. So all in all, SBI has performed on all metrics. Recoveries were higher than slippages. In fact, analysts are still quite upbeat on the stock. The stock did see a downtick of 2% or thereabouts. That could mainly be because of the outperformance that the stock of SBI has seen versus the bank Nifty over the last 1 month. On a YTD basis, it has SBI has underperformed the Nifty bank, but on a 1 month basis, it has clearly outperformed with a gain of 6% vis-a-vis the Nifty bank index gaining somewhere around 3% or thereabouts. If you look at the commentary coming in from SBI chairperson, pretty upbeat. He said that the bank has posted its highest ever quarterly profit for the third straight quarter. In fact, credit growth has also been robust for SBI across segments. NPA ratio is at the lowest level they have seen in over 10 years. In fact, credit cost is at 32 basis points for the fiscal, and they have a well provided book. A corporate book is provided to the extent of 98%. And when it comes to the ECL provisions, they have said that RBI has not firmed up their views on expected credit losses thus far. So they will wait for RBI guidelines to come out with the ECL provisions. So aside of that, another stock that was in focus was ITC. Numbers are pretty mixed. Given the fact that profit has grown at 21.5% or thereabouts, largely in line with expectations. Revenue also grew somewhere around 5.6%. That was also largely in line with expectations. What is disappointed is the margin, because that came in at 37.9% vis-a-vis expectations of 38.1%. So, not that big a disappointment, but slight miss, you can say. On the other hand, cigarette revenue growth has come in at 14.2%, which is slightly below expectations of 15 to 16%. And EBIT growth for cigarette business has come in at 14%, which is again in the expected band of 13 to 15%. FMCG business has done pretty well. Revenue growth has come in at 19%. Hotel revenue growth has beaten estimates on the back of a low Omicron base. Agribusiness has declined 18%. That is higher than the expectations of 12% or thereabouts, which is why maybe the stock was, the investors were a little disappointed, even though numbers have been largely in line with expectations, even though the stock has been outperforming recently. So, must have come under a bit of a profit booking after the kind of numbers that have come in. The next stock on my list is Teamlease. This stock was down 2% in today's session. Profits have missed estimates. Of course, the slowdown in IT hiring is something that is not boding very well for the company. Its specialized staffing was the highest margin business for the company, and in light of the slowdown in IT hiring, this in fact segment has borne the brunt of it. In fact, management says that Q1 and Q2 will continue to see a slowdown in IT sector, which is why specialized staffing segment will remain under pressure for some time. In fact, if you look at IT hiring, net hiring at the top 2 IT firms have dropped by 2/3 as demand has eased, and which is what we have been seeing when it comes to the IT earnings. They had all given their guidance when it comes to hiring and how it will slow down in the coming quarters, which of course will boost IT margins. The management of Teamlease expects headcounts to improve from the third quarter. They intend to have specialized business margins back to 8% levels from the second quarter of the current fiscal. However, when it comes to the startup universe, they don't expect any more, headcount loss. When it comes to that, we have seen a wave of layoffs when it comes to the startup universe. So that seems to be, out of the way for now. That's what the Teamlease management has been saying. And the management is also targeting somewhere around 20 basis point improvement on a quarter-on-quarter basis in its margins from the second quarter. When you look at the stock of Teamlease, it's slumped somewhere around 2% or thereabouts. In fact, remember they had done a buyback in the previous quarter of 100 crore rupees or thereabouts. When you look at the internals, price to earnings ratio is somewhere around 34.9, which is the lowest, in fact lower than the sector PE of 63.4 or thereabouts. So that makes the stock a little attractive. However, given the situation with respect to hiring, it looks like the going will not be that good for the company for the coming few quarters. If you look at the mutual fund holding, that has increased by 1.6% in the last quarter. So that's something that mutual funds in fact have been upping their stake in the counter. But we'll have to see how this entire hiring thing pans out for some of these companies like Teamlease and Quest Corp going forward. Well, those were some of the stocks on my list this afternoon. With that, I think we've come to the end of this edition of Closing Bell. But I'll be back with the markets tomorrow at 8:30 a.m. So don't forget to tune in. And if you have any comments that you want to post, you have the comment section below on our YouTube feed. Do post your comments and share your feedback with us. But for now, it's a goodbye from me. And tune in tomorrow at 8:30 a.m. and catch all the action on Morning Trade. Thanks a lot for watching.